Hello, future billionaires. Welcome back to another episode of the Invest Like a Billionaire podcast. I'm your co-host, Ben Fraser, joined by fellow co-host,
Bob Fraser.
And today we are coming on to talk about gold, investing in gold. So this is a top of mind episode. So these are, hot takes from Ben and Bob on, things we're seeing in the market, questions we get from investors, things we follow. And I think this is something we've talked a decent amount about on the podcast, probably more about a year or so ago. We hit on it quite a bit. But what we find inevitably, and I think what spawned this was an email I received recently from someone I won't name, but we would definitely put them in the hard money, economist camp, a well-known economist. And what's so interesting about the space that we're in, where, we invest a lot in real estate, we talk a lot about real estate, we love real estate, but it tends to attract the hard money, the Austrian economists, which believe, real assets are the only way to go. And you got to, fiat currency, fiat paper, it's meaningless.
Only protection.
And gold and real estate are your only protection. And so we love the real estate side of it, but, we have some different takes on gold. This is the Invest Like a Billionaire podcast, where we uncover the alternative investments and strategies that billionaires use to grow wealth. The tools and tactics you'll learn from this podcast will make you a better investor and help you build legacy wealth. Join us as we dive into the world of alternative investments, uncover strategies of the ultra wealthy, discuss economics, and interview successful investors. Looking for passive investments done for you? With Aspen Funds, we help accredited investors that are looking for higher yields and diversification from the stock market. As a passive investor, we do all the work for you, making sure your money is working hard for you in alternative investments. In fact, our team invests alongside you in every deal, so our interests are aligned. We focus on macro-driven alternative investments, so your portfolio is best positioned for this economic environment. Get started and download your free economic report today. What's so interesting about kind of your story, which you've shared before, but I want to hear it again, just on your journey from, being the gold bug, back in the day and investing in gold, trading gold, and really being a hardcore Austrian economist to now, having a more broad viewpoint on it and just talking about the performance of gold, because what it always comes down to, I feel like right now is the heyday of all the gold bugs that are touting that gold is the ultimate inflation hedge, because that's kind of what it always comes back to, right? It's gold is your hedge against the stupid government, right? And so now's a great time. The government's printing a lot of money. We're seeing really high inflation. Gold is just pent up, ready to just blow up in price, right? It's just perfect storm for gold. And we have a hot take. We don't think it's gonna do that. Yeah. So share a little bit of your story in gold.
Yeah, let's give a little background, because I love gold.
Right.
Okay? I love gold. Yeah. So I actually brought a little gold coin here, and this is a 2006 gold bullion. This is a buffalo coin, and it's got a beautiful picture of a buffalo back there, designed, I believe, in 1917. And here is a beautiful Indian head, and it's just gorgeous. This is actually pure gold, 24 karat gold. It's an ounce of gold, and I love owning this.
Yeah,
it is beautiful. What's not to love about this? I love gold, and I have brought here a little brother, a silver bullion coin, and this is a beautiful Liberty head and an eagle back here. Just gorgeous coins, and I love these things. And historically, they are money. This is how money. Right. Money was made. And so I because I loved gold and I became a gold investor in the 80s, I became a gold mining investor, investing in gold mining companies. Actually made a lot of money buying and selling gold mining companies back in the 80s. So I naturally became kind of this hard money economist, and was quite shocked when, for example, in the 2008 crisis, gold didn't do well, and it just never seemed to track inflation. And so what it actually did, to your point, it's the ultimate inflation hedge, right? Everyone knows gold is the ultimate inflation hedge.
They just know it. It's just
everybody knows
intuitive, right?
So I actually put together some of the biggest winners and losers during, by decade, and compared to inflation to see what it is. And I have a little chart here that you can see. And this chart, so I look at the decade of the 70s, decade of the 80s, the 90s, the 2000s, and the 2010s. And if you look in the very left, the 70s there, that's red is actually the rate of inflation. So the 70s was a high inflation time. It was roughly 7.5% inflation average over the course of the decade. And you can see gold skyrocketed, but you can't give gold all the credit for tracking inflation, because gold was fixed at $35 an ounce. And so they basically unfixed it and let it free trade. They blocked the convertibility to gold at 35, and so gold skyrocketed up. So I would argue that's the decade of the 70s. It's really not the decade of the 70s. That's the 200 years of prior gains, all right, in one kind of decade. And you can look at housing beat inflation, commercial real estate beat inflation. Stocks didn't quite beat inflation during the 70s. During the 80s, 80s was also a very high inflation decade. We're averaging over 5% inflation.
Probably closest to what we see now.
Exactly.
Yeah, from an inflation standpoint.
Yeah, very, very high inflation. And you can see housing went up, actually beat inflation, the green. Commercial real estate didn't quite beat inflation, but tracked pretty close. Gold lost money.
What? No. We say gold is the ultimate inflation hedge.
and it lost money. You actually lost money in gold. I mean, this beautiful gold coin, I think I bought this in 2006 for, $1,500. Today it's $2,000. All right.
Yep. 20 years later.
It's not that great. Okay, well, let's skip ahead. Gold had a bad decade, right? Let's skip ahead to the 1990s. Well, now inflation is cooling down. It's more 3% range. Gold loses money again through the decade of the 1990s. For 20 years, gold is actually losing money. And then now inflation is cooling off even more in the 2000s. It's still, it's 2-ish%. All of a sudden, gold decides to take off. Well, and I liked that it took off because I made a lot of money in that one. I actually rode that whole wave up and sold gold when it was $1,900 an ounce. I think it hit $1,922 an ounce, something right around there. And I pinged the top, I pinged the bottom, and pinged the top, and did super well. And then gold just has not been able. It really crashed pretty much right after that, and I believe that was so it's really not been a great inflation hedge, and it's not during high inflation. It really hasn't proven itself as the ultimate hedge.
Right.
So
let's talk about some of the reasons why. We've done this in past episodes, but it's difficult to store. It costs money to store. You've mentioned these things before, right?
Right. So gold, think about it. Okay, if I buy a piece of real estate and I'm renting that out, I have a yield.
Right.
Well, gold has a negative yield. It doesn't earn me anything. Mm-hmm. If I own this, it doesn't produce anything for me. And it hasn't. I've owned this for a long time and it's produced some joy, but it hasn't produced any economic benefit to me. Right? Whereas I own a real estate, I'm getting paid for that thing. Right, so this doesn't pay me. In fact, I have to pay to keep this safe.
Right.
I have to put it in a safe deposit box. I have to pay somebody to keep it safe for me. Right. So it's really not. It's not positive yield. It doesn't actually do anything. So what people do with gold is they bury it. Well, what good does that do anybody? It doesn't have a ton of utility. And if you actually look at it, what's happened truthfully now, Bitcoin has kind of replaced gold,
right,
to a lot of investors. And so if I was to take $1 million and I was to convert it into bullion, one, that'd be darn hard to do. And my pants would be sagging pretty low. I mean, this stuff is...
It's heavy.
It's heavy. I mean, this would be 1,000 coins. I don't know what this would weigh, but it's a lot. I mean, trying to transport that, taking that on an airplane, you're never going to do it. and that's just $1 million. But
Right.
if you have $1 billion, it's unwieldy. So Bitcoin is obviously much more liquid, much more convertible, much more easy to hide and put in a little thumb drive and
Yep.
go wherever you want with it, right?
And part of the appeal of gold is there's a limited supply, right? There's only so much that can be mined.
But the same thing
Physically,
with
but the
Bitcoin.
same thing with Bitcoin, it's solved a lot of that
Right.
supply
Yeah.
challenge.
So for hard money analysts, one of the reasons they like gold is because it has a limited supply.
Yes.
The idea is that no government can print this thing, right?
Yep.
And so if they can't just print these willy-nilly, well, then it's going to retain its value. And there's definitely some truth to that. But what happens is when you tie a nation's economy to gold, you limit that economy by pretty dramatically. And here's an example. So let's say we have a population 100 years ago of America that's, and I'm probably not even close, but let's say it's, 20 million people. Okay. And we have an ounce of gold for everybody in our vault in the Fort Knox. So you have 20 million ounces. And our entire economy is based on the convertibility of that. But let's say that economy now we have 400 million people. So we've gone up, 10x in population, 20x in population. But the amount of gold in circulation is exactly the same.
Right.
So it's actually deflationary, massively deflationary. There's not enough currency in circulation to actually feed the economy and the population. And so what happens? So during the Great Depression, so what happened? All countries used to be on the gold standard or some form of the gold standard with convertibility. So convertibility means I guarantee you as the U.S. government, you can give me a paper dollar and I will give you a gold dollar back. That's convertibility.
Right.
And so that was very kind of standard. Everybody believed that, the only reason you can trust paper currencies is if they were backed by a gold dollar. It made sense back then to countries that had been used to hard currency dollars. So what happened during the 1930s, during the Great Depression, is there was a deficit of demand. So you think about it, people stopped buying things. And when people stopped buying things, people started going out of work. And when people started going out of work, they stopped buying things. And it still became this negative doom loop that happened. And countries wanted to do deficit spending. And I'm a fan of this, okay? Deficit spending. So when the government steps in that point and go and create demand, they go say, okay, no one wants to buy widgets. The U.S. government, go out and buy 100 widgets today. Well, all of a sudden, now the widget guy's going, okay, well, I'm not going to fire anybody today. In fact, I might hire some people. And then the people that get hired, well, now they start earning a wage and they start.
Right.
So, and it's not inflationary. If I were to print money to create demand when there is no demand, when there's a huge deficit of demand, it's not inflationary. And this is one of my points. And so there's a huge misunderstanding around the 1933 act where FDR confiscated gold, right? The idea is that the evil government desperately doesn't want you to own gold because it's power and they want to keep power out of your hands. And so they confiscated gold. The reason he confiscated gold is because he was on the gold standard.
Yeah.
And in order to do deficit spending, he knew he needed to spend to create some demand to keep this doom loop from getting doomier.
Right.
But he couldn't do it. He couldn't spend money unless he had gold in his vault. So what he did is he confiscated gold to get gold in his vault, and then he had a bunch of money that he could then do deficit spending. Okay. And guess what? It worked. Well, here's the other story. So in the 1930s, all the economies of the world were in this same doom loop, and they're all going down. As soon as they all exited the gold standard, one by one, their economies, I can show you a chart. And the charts just immediately, their economy just reversed. So it actually it's not designed, the gold is not ready for modern economic systems to be the foundation of all trade and economic activity. It just isn't. There's not enough of it. And it doesn't expand with population or with economies, which we need it to do. If you want to have zero inflation and zero deflation, you've got to have a money supply that exactly equals economic activity. And gold certainly doesn't.
Right.
So
And it kind of goes back to an earlier episode that we did talking about the fate of the U.S. dollar, right? Because a lot of these hard money economists say that we should go back to the gold standard, right? Or they've been kind of waiting for however many years for the dollar to crash just because it's not backed by gold, hence fiat, right? It's not backed by anything hard. But to your point, it's an old way of thinking. It has not kept up with the modern economy and modern needs.
There's no way we couldn't go back to a true gold standard. You can't fit. There's how much, what's the M2 or the M3? There's way too much currency in circulation relative to the amount of gold. Gold can't keep up. It's just not going to happen. There's no way we can go back. Maybe some kinds of limited convertibility if people want to do that, but again, there's no reason to do that. I mean, you look at the currencies the Swiss franc is considered a hard currency today, but it's not backed by gold, and it's backed by a government that's very conservative and that doesn't do a lot of deficit spending and that maintains their currency with great discipline, right? And that's really what's necessary. And I concur. I concur with the people that say, hey, we need more discipline in our fiscal policies. But so they want to hang a gold ball and chain around the neck of the politicians. And hey, it sounds like a great idea because I want some discipline as well. And I think we're out of control. But this is not going to help. And as beautiful as it is.
So what do you feel like the role of gold in a portfolio is? And again, this is not financial advice for anybody, but
great question.
Yeah.
Great question. And, I like gold. I have a little bit of gold. It's really the role is really more of an insurance policy. It's a chaos hedge.
Yeah, it's catastrophe.
At one point I was reading about, EMPs, electromagnetic pulses, which, come from a nuclear explosion in the atmosphere. It literally blacks out all electronics. It wipes out electronics, everything. And the sun does the same thing when it does these massive CMEs, coronal mass ejections. It causes EMPs in the atmosphere and can wipe out electronics. So I'm thinking, so let's say, you get these massive EMPs and wipes out that kind of thing. Well, you probably want a little bit of gold, but you probably don't want a $2,000 beautiful gold buffalo.
Right.
You probably want something, and I really liked at one point this, what these bags of gold, right? They're bags of silver. It's just called junk silver, and it's pre-1965 silver coins, which were 85% silver or so. And those are presumably spendable. So let's say, you're talking about really end of the world scenario. Hey, why not have a little bit of that? But let's go back to just even you lose power you're in Puerto Rico and the hurricane comes through and you're without power for 60 days or 90 days. You want to have something that you passes for currency when the credit cards are not working, right?
Right.
So I would argue that, maybe it makes sense to have a little bit of chaos currency around. And so insurance, I guess, but I wouldn't put more than, 5% of your portfolio into gold and silver, except the beautiful part of it. I like looking at it.
Right.
I'm never going to sell it, because I just like it so much. It's just stunningly beautiful. It's a work of art and metal that I can hand around and talk about. So conversation piece, but it really has no utility besides that, besides your joy factor,
Yeah. Well, hopefully, these thoughts are helping you think, differently about, some of the headlines maybe you're seeing. So obviously we love feedback, and we have a lot of people write in and share thoughts. And obviously our opinion is one opinion, but hopefully, some of the data, the data doesn't lie. If you look at the inflation and the performance of gold by decade, it's hard to make the argument. The correlation is probably pretty low, right?
Yeah.
As far as gold tracking inflation. And so, again, hopefully this was valuable and you got something out of it. We always appreciate you sharing this podcast with friends, family, and of course, rating and reviewing on the platform of your choice so that we can continue to share this with more people. Thank you so much.
Take care, all.